Ladies and gentlemen, good day and welcome to Bank of Maharashtra Q4 and FY22 earnings conference call. We have with us from the management, Shri A.S. Rajiv, Managing Director and CEO, Shri A.B. Vijay Kumar, Executive Director, Shri Ashish Pandey, Executive Director, and all General Managers of the bank. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Shri A.S. Rajiv. Thank you and over to you, sir.
Thank you, ma'am. And I welcome all of you to this con call. And thank you so much for supporting the bank for several quarters, past several quarters. And I am here with our two executive directors as well as our all vertical heads, general managers, to have any kind of questions after this introduction we can have. So as you are aware, today our board cleared the results for the quarter ended 31st March 2022 as well as the year ended 22. The total business grew by 20% and the deposit growth was around 16% and the CASA ratio reached 57.85%. Gross advances is increased by 26% to 1,35,000 crore. In case of asset quality, gross NPA declined to 3.94% while net NPA reduced to 0.97%. In this process, provision coverage ratio improved to 95%. For the current quarter, the net profit booked is rupees 355 crore, a 115% growth as compared to corresponding Q4 21. Operating profits stood at 1,179. It is lower than the corresponding Q4, mainly because of one exceptional item of Bhushan Power. We are aware that recovery of return of accounts of rupees 508 crore. Separating this exceptional item, our growth rate is around 13 to 14%. So NII is increased by 17% and you might have seen that for the past 8 quarters, our growth rate under NII is double digit. And net interest margin improved to 3.17% and this NIM also we could able to continue the say above 3% level during the current year and we expect that this trend will continue. Cost to income ratio is contained to 45% and return of assets improved to 0.65. Capital adequacy ratio is improved to 16.85% of which Tier 1 capital adequacy ratio is 12.76%. Today, our board is also cleared an umbrella limit of 5,000 crore capital raising plans for the current year for taking care of the growth prospects of the bank. Especially in case of, we are thinking that advances expected to grow by around 16 to 18% for the current year and deposits at the rate of around 12 to 15%. So to cope up with the advances growth, 5,000 crore umbrella capital raising plans are in place. For the full year profitability, if you see the net profit is reached 1,152 crores, a 109% growth as against 550 crores for the last year. Operating profit has shown a growth of 22% year-on-year basis to reach 4,848 crores as against rupees 3,960 crores for year ended 31/21. NII growth for the full year is 23.42% to reach 6,044 crores as against 4,897 crores for the year ended 31/3/21. The NII for the year is grown by 23% and the advances of the year was average growth by 25 to 26%. So it is the interest income is in tandem with the growth rate of advances. So fee-based income for the current year also is improved by 23%. And non-interest income is up by 1% only, basically because of the exceptional items, which I already told you. Cost to income ratio, the full year is also below 45%, that is 44.26%, and return of assets improved to 0.55% for the full year. Return of equity is 11% as against 7.17% for the year ended 31/3/21. So the assets and liabilities, net advances is grown by around 28%, and RAM sector is continued at the range of 59/41, which we have envisaged 60/40. So the bank's plans also, as well as the board direction also, we have to hover around 60/40 range with band of 2%. That we are continuing to do that. So the retail sector is grown by 24%, MSME is grown by 14%, and agriculture is grown by 17%. This MSME growth rate as compared to last year by 3 to 4% is lower because during March quarter we sold off around 2,500 crore IBPCs for increasing the other income. So the capital adequacy ratio is very comfortable, and bank has raised 1,693 crore capital during the current year. So these are the major points which I wanted to share with you. And the provision coverage ratio is we have already reached at 95%. So these are the major highlights, and now we can start with the question and answer session, and we are happy to have any questions, and we will answer the questions. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Suraj Das from BNK Securities. Please go ahead.
Thank you, sir, for the opportunity, and congratulations on a very strong set of numbers. So, sir, I have a couple of questions. The first question on the growth side. So, sir, the growth rate has been very good for the past couple of quarters. But if I see the segment-wise growth, sir, you have seen strong growth on the corporate side, which has been around 38-39%. And within that, if I see your PPT, then it looks like the majority of the growth has come from infra and NBFC segment. So, sir, if you can just give some more color here, then that would be great. And also, sir, if you can talk about the competitive intensity here, because it seems like that the pricing is very tight in this segment, especially on the large corporate space. And if I see your yield also, that has been on a declining trend for past couple of quarters. So that is the first question, sir.
So what you told is correct, and the corporate is grown by 37 to 38% last year, because our growth rate was 26 to 27%, slightly on higher side as compared to industry growth. So the reason was corporate sanctions we have made during 2021. Because of the COVID and other reasons, we could not able to release that 5,000 to 6,000 crore. But this corporate, it is true that some infra also is there, but mainly these are government sector, those with the government guaranteed accounts and other support systems are there. So all these accounts are guaranteed by the government, and as far as pricing is concerned, in this type of accounts, there was no pricing concessions, and we have, to my knowledge, we have not gone for any kind of competitive much reduced pricings. But reduction of yield is one of the reasons that 7%, because our 1 year MCLR itself is 7.25. So, and then there are number of areas like housing loans is coming around 20% of the total advances, which is our competitive pricing we have given. Average yield of these housing loans will be around 6.80, 6.90. So if you, as per risk management practices, if you go for that, you see the quality of the assets is improved and the slippage is already contained. So this is the one area where board also is given the direction to increase the quality of the advances and let it be yield maybe little lower than the earlier yield. So the yield, if you see that 8 quarter, it is come down by only 40-45 basis points. But the cost of deposits and this was the reducing interest rate scenario for the past 2 years. So now at present it's likely it is gone up by 25 basis points. So there was not much yield reduction actually happened during the past 2 quarters, barring this 20-25 basis points. But in case of infrastructure loans and government guaranteed loans, of course it is average yielding only 7%. But when see the average cost of deposit of 3.25, 3.26 with the CASA ratio of 58%, 59%, I think that is a profitable venture. And one more thing, we have kept some amount under interest on advances also for COVID provisioning. So because during the current quarter also we have kept around 200 crore additional provision we have kept for COVID provisioning for that. So this amount around 175 crore is kept from the interest on advances actually, because at any extreme cases whenever the interest will come, this will take care of. If you add that, I think our interest yield will be around 7.2 to 7.25%. I think I have cleared your queries.
Yes, sir. Thank you so much, sir. The second question, sir, is on the retail side. So on the retail book has also seen some good growth. And sir, within retail, the breakup that you have given on your slide 25, there is 10,000 crores of other retail. So sir, may I know, what are the segments here? Is it personal loan, gold loans? How much would be personal? How much gold? Or what are the other segments here within this other retail?
Yes, out of that, mainly earlier our personal loan segment was slightly very less. Actually, only 300 crore was there. So that during the current last year, personal loans mainly this is salaried accounts, because we have taken over number of salaried accounts and the government accounts of government of Maharashtra, government of Madhya Pradesh, and we could able to got some kind of salary accounts from the government employees. So these salary accounts, whenever we have taken over that salary, along with that some personal loans as well as other housing loans, we could able to got it. So there was 1,000 crore growth is there in personal accounts, another 2,500 crore jewelry loan accounts growth is there. So these all are mainly is a good quality growth is happened that. That is a major area where we have grown that. Our GM credit is with me. Mr. Rudra, you have anything to add?
No, gold loan is the major area in other retail loan where the growth has happened during the past 1 year. It has reached to almost 3,000 crores. And then the personal loan segment, as Sabu was telling, there is also substantial growth. And third segment which we focus was on the vehicle loan. The growth in vehicle loan is also quite good. So all these retail segments has given the overall growth of additional 10,000 crore in other retail segments.
Okay, understood, sir. And sir, how much would be the total gold loan book, sir, which includes, agri gold as well as these retail gold and MSME gold? So what will be the total gold loan book?
It will be around
around 3,800 crore is the balance outstanding as of now, and out of that, other than agri will be around 1,500 crores. Balance is agri loans.
Okay, understood, sir. Sir, my next question is on the asset quality side. So, quite good performance on the asset quality side as well. Your gross NPA and net NPA all have declined, for past many quarters. So, on the slippages side, sir, I have one question. So, you have seen some around 740 crore of slippages in this quarter. So, any lumpy exposure here, sir? Any large account or any large retail group account here, sir?
Mr. Rudra? Anything?
The slippages in this quarter are 739 crores, actually. Some big accounts are there, and some MSMEs are there. So it's 739.
I think that from 80 crore one account is the highest.
Highest is the largest ticket
ticket
in the last quarter.
Okay. Okay, understood. And sir, on the SMA book, so till last quarter, sir, I guess you used to give SMA book of above 10 lakh. However, this quarter the classification looks like has changed, and now you are reporting above 1 crore. So sir, may I know, what is the total, SMA, which includes SMA 0, 1, 2, and also below, all accounts, including below 10 lakh or below 1 crore. So what is the total outstanding would be on the SMA book?
Yes. Kabadi?
Yes. Yeah. Regarding SMA-1, total SMA is 2,500 and SMA-2 is 900 crores. Total.
Including 1 rupee.
Including 1 rupee. But when we go with the best industry practice, all banks are giving 5 crores and above. Previously, we used to give 10 lakhs and above. By seeing the other banks' performance, 5 crores and above, this time we have given 1 crores and above.
Okay, understood, sir. And sir, what would be the two more data getting questions, and that will be last from my side. Sir, what will be the outstanding ECLGS figure, sir?
The outstanding ECLGS figure is 2,400 crore, and our total COVID portfolio itself is 2,600 crore, including the LGSSA and LGSSC. So these things are there. So they are put together. The entire COVID exposure is 2,600 crore. Out of that, ECLGS is 2,450.
Okay. And last question, sir. So on the investment slide, you have given, modified duration. However, I just want to know, sir, what would be your PV01 number and what is the threshold yield beyond which, there will be an MTM hit kind of a scenario. So what is the PV01 and what is the threshold yield?
Figures. So that PV01 figure, we will, I think at present I don't have that number. I will provide you. 1 second.
PV01 for AFS HFT is 3.51 and for a total portfolio it is 21.81 crore.
Okay, sir. Okay, thank you so much, sir.
Yes.
Thank you. Before we take our next question, we would like to remind participants to ask a question. You may enter star and 1. The next question is from the line of Mahesh MB from Kotak Securities. Please go ahead.
So just in just a follow-up to the previous question, you had an AFS book of approximately 1.5 years, and yet you did not report any change in the provisioning line. Did not seem to have any impact on account of the treasury yield change. How would you explain that, sir, for the quarter?
So what was the...
My term duration for AFS HFT, that is trading book, is 1.63. So, and my total investment into the AFS HFT book is not more than 3 years. It is all short-term investment.
Okay. No, but yet there was a yield increase at least for the last couple of quarters.
Yeah.
So if there was no impact of on the treasury income line, how would you explain that?
Because we have kept the shorter duration papers in our portfolio, and the appreciation was there during the first 2 quarters. Since yield has been increased, there are some little bit adverse movement into the portfolio, but that is hardly 45 crore amount.
Just to add it that you know that as per RBI guidelines, earlier we were showing depreciation on investment as a part of provision.
Correct.
Now, in view of the recent RBI guidelines, it is a part of we are netting it from the trading profit. So during this year, that total depreciation was 42 crore.
Okay. Okay, so can I also assume that from here onwards there is zero gains available in the AFS book, or you still have anything left?
Yeah, there is gain is available. Some securities was due into this 14th of April, around 3,300 crore. One security was due, and it was matured into redemption happened into 13th of April. So, and that write back, whatever MTM was there, that write back around 50 crore we got.
Okay, perfect, sir. So the second question is on the, if you look at the NPL book today, the pool of NPLs that is now sitting there essentially is coming from agriculture.
Yes.
Is there anything there now that can be done here, or this remains where it is today?
No, agriculture actually it is coming down. Now agriculture recovery is very much on higher side and is increasing now. Last year it was around 21% NPA was there. Now it has come down to 15%. And last year there was a good movement of review renewals and during now this is the agriculture season is starting that there is a good number of review renewals are happening. And we may be able to bring down further during the current quarter, agriculture NPAs.
Okay. And in your assessment, this 4% gross NPA for this year, where does it end here?
So now for going forward, I think that when the numbers are reaching to zero level, it may be slightly the growth, the bringing down the numbers may be slightly slow down. But our expectation is that our intention is to reach to 3% in case of gross NPA.
Perfect. Sorry, my last question. In the ECLGS book that you have you also placed a claim with the agency, and have you got your money back from them on time?
No, sir. So far we have not claimed because the number of NPAs have been contained, and that is why the claims are not there in large numbers. So from this quarter, whatever the numbers will be there, we will start claiming from the NCGTC. So
Okay,
far,
perfect.
it is not.
Okay, sir. Done. Thanks a lot for this.
Thank you. Anyone who has a question may enter star and 1. Our next question is from the line of Ashok Ajmera from Ascon Global Services. Please go ahead.
Good afternoon, sir. First of all, my compliments to you, Mr. Rajiv, Vijay Kumar ji, Pandey ji, and the entire staff of the Bank of Maharashtra for giving fantastic results. And you are the first among the public sector bank, I think, to come out with the results, and you are setting a good tone for that, having achieved on almost every front. Having said that, sir, we have grown very well in last 1 year, especially in last 2-3 quarters. So going ahead, what is the roadmap for our credit growth? Because you are comfortable with CRAR of about 16.85%, and you are going to raise some more capital also. So where do you see now the growth coming up, and what is our target of 20 to 20 for the credit growth, sir? This is my first question.
So credit growth we are expecting around 16 to 18% credit growth during the current year, while the deposit growth will be around 13 to 15%. So for that purpose only we are planning to raise little capital also, though the capital adequacy ratio is of 16.85 is good, with the Tier 1 capital of 12%. So we may be require some capital requirement for the growth of the credit is concerned. So for that purpose, board is already given an umbrella permission of up to 5,000 crore raising of the capital, including equity, Tier 1, Tier 2, all these things. So we feel that last year we have done 26 to 27% net growth of advances, and this year it is definitely we may be able to do 16 to 18% advances growth, and we have already sold out some 2,500, 2,600 crore IBPC also during last quarter. That growth rate we have not considered for this 26% range. Otherwise, the growth rate will be around 28 to 30%. That is a 5 to 6% maybe connected with the previous years. So the real growth rate of credit was around 20 to 24%. That much we are not envisaging, but it may be able to do with 16 to 18%.
In that still we are going to have the major reliance on the corporate credit, or we are now going
so the same level of 60-40 is a range-based projection is given that.
Yes, sir. Sir, coming to my other data points, is an increase in the fixed assets of 568 crore during this year. Because our net fixed asset used to be, 1,674 crore last year, and it is now 2,242 crore. So what are the main component I might have missed in the last few quarters?
I think that is a revaluation is done during the year. We have revalued our fixed assets and increased by around 450 crores. That is a revaluation. Correspondingly, that is one of the reasons why depreciation also is gone up by around the 70 to 80 crores, because revalued assets we have provided the depreciation also.
There is a full provision, 100% provision of the fraud accounts of 502 crores. How much was it in this quarter out of that? Or was it nil in the quarter, last quarter?
Regarding this quarter, I'm not having right now, but whole year I'll tell you is around 30 accounts amounting to 1,146. Here I would like to have, there is a, clear-cut instruction from the DFS that any account become NPA 50 crores and above should be examined from the fraud angle within the 3 to 6 months time by every bank. It is maybe a solo or maybe multiple or consortium. In our bank, I would like to say we have only 3 accounts which is above 50 crores which have been examined and treated as a fraud. And as of today, we don't have any other account above 50 crores that should be examined and fraud. And wherever out of which sole bank is out of 130 accounts in the last financial year, 125 solo means sole banking and 5 are consortium. And every account has been closely monitored. Wherever FIR has to be filed with the law enforcement agency has been done, and we are closely following it up. In couple of accounts, I would like to share with the happiness that even though it is treated as a fraud, now our bank is moving towards even the commercial angle. We look at it with recovery comes after taking appropriate clearance from the CBI or police. We enter into OTS to recover those amounts. So this is a big law enforcement agency also take a pragmatic view and supporting us. This is what happening in the industry. This is what I wanted to share with you. Quarterly, Vijay, if you want, I will send you my mail.
No problem. So, what is our exposure in the future in the Shire Group? And what is the treatment given if there is any exposure?
The spray is 550 crore. Now that account is in NCLT. As you know that it is the bids, etc. will come now. We expect the recovery through NCLT in this account now in the coming quarter or at least in the next 2 quarters.
So 100% provision has been made, sir?
Already made 100% provision.
And future group?
Future is 15 crore only.
Okay. Fully provided for?
Yes.
Sir, this last question of mine. Sir, in this implement of the resolution plan, standard consequent of the account become standard, there the outstanding was 3,603 crore, which came down to 3,343 crore. Writing return of 300 crore and slipped 350. So it gives a figure of 20% or 22% of the account being made of the total of the standard accounts made out of the implementation of the resolution plan. So whether this percentage is going to remain same for 20-25% out of the balance outstanding, which can be which finally goes to NPA or write off.
I think we could. Sorry that we could not able to understand properly. I think the question. You can just. Yes, sir. Mr. Rudra.
I will tell you. Actually, our total restructured book December was 6,600 crore. Out of that, there is a small addition during the quarter was around 17 crore and upgradation was 29 crore. And basically, 1,000 crore ceased to restructure. That 300 crore, which 20% you are finding, is one exceptional account was there, which as per the directions given by the regulators, we have classified that. Otherwise, there is no that unit is also viable. That unit is running well. Then we don't expect any further such slippages, which you are saying that 20% of the book is not going to slip.
Which is that account?
That account, I will
Offline.
give you the details separately.
Okay. Because I found it little higher, that is why I asked this question.
Right.
Okay, sir. Thank you very much from my side. I'll come back again if time.
And in fact, the restructured book has come down by 1,100 crores.
I've seen that. Yes. Thank you, sir.
Thank you. We'll take our next question. That's from the line of Sushil Choksey from Indus Equity. Please go ahead.
Congratulations to Bank of Maharashtra team and management. Sir, my question is, you've given a guidance on advances and deposit. Can you highlight where are we drawing so good numbers of CASA from metros, non-metros?
The CASA numbers, what we told is that 58% is the CASA at present and average is 57, 58. And we may be able to continue with the same percentage. But this is basically our CASA base is increased. Individual customers also is there. But around 15 to 20% amount is coming from government accounts also is there.
Okay, but are they in state of Maharashtra majority or they from other states?
Not only Maharashtra state, there is other state government also, state government as well as central government also is there, Madhya Pradesh government is there, Delhi government is there, different spread among all the states.
What kind of cross-selling opportunity are we able to capitalize on these CASA accounts?
Yeah, Sushilji, actually your question was, it is a well spread across the country, absolutely, and it is actually not only the geographical distribution, I would say, but even, the individual accounts to government accounts. So certainly, because we have expertise also, you can say, in the collection of the taxes and the dues of the municipal corporation and all. So that actually strategically we have deployed, and that is also one of the reasons, not only, for the time being for a day or two, but then it is a consistent, as told by our MD sir, that the average itself is around 54 to 55%. So that is on the one side, and secondly, that we are expanding nicely geographically outside Maharashtra as well. So that actually, if we see, the combination is also going ahead across the country. So that is yielding, and certainly the Bank of Maharashtra as a brand, that certainly we do enjoy the loyalty of our customer, that is the customer centricity. Now, as you said, the cross-selling. So certainly let me share with you that in one of the questions which was asked by one of our analysts, that the retail growth and all, and certainly on the other loan, personal loan. So as our MD sir has already narrated, that we enjoy certain very good relationship with the state government, where we have salary accounts and also the tailor-made schemes for all those people. So actually there is a huge opportunity lies in the upsell and cross-sell. So what bank is trying, and you also wanted to know that what is the horizon you are looking at. So not only on the government account and the individual salaried account, but yes, we are on the analytics part as well on the database, and the upsell, cross-sell we are trying, and every, quarter to quarter we also want to increase the number of products, which is the direct share for each customer. So I believe we have answered your question.
If you look at your CASA has grown roughly at 5 to 6% year on year from starting 17 to 22. Do you expect to maintain that growth pattern, or you will stabilize around this number?
Okay, I love to answer this question. This question has been put so many even during press conference, and MD sir and DD sir has already explained, but I'll add a few more points. Basically, the CASA will directly related to the digitalization and customer service. In both the segments, we believe that our bank has been doing tremendously for the last 3 years. Digital, yes, our MD sir used to say our issuance of even debit card, it was one digit, single digit. It was less than 10% about a couple of years before. And even now we have not reached that. We have just crossed 50%, to be frank with you. And that 50% itself given a good amount of CASA.
same amount customer service has been improved. And we are growing, as he rightly said by AD sir, we are opening up branches outside Maharashtra, other than the Maharashtra domain, and then activation of all the branches is happening. And when we analyze, the whole aspect, it will be very pleasant surprise to us. Even SHG account, self-help group, that has given a substantial CASA to us. And PMJD account, of course, it's a country phenomena. If you look at the Jan Dhan account, it was started with the 500 rupees, 1,000 rupees. Now steadily the average Jan Dhan balance, it has cost 3,600. 3,600 rupees average deposit is there. When you look at it, even our own bank, we have got about 18% zero balance. If we start attracting, and we will improve. So ideally, we are aspiring to maintain at 60% level, but here and there few percentage will. But we are focusing on them to maintain at sustain this level and improve up to the 60%. And of course, our connection with the state governments and then the municipalities by creating of special IT packages, that also yielded a good result in improving our CASA. In addition to the government and in downline retail deposits also happening. Moreover, now whenever we meet a corporate customers or a mid-stage customers, we are not only asking the business from them, downline their customers, their staff, their ancillary service also we are asking. So our focus is in 360 degree.
Sir, based on your experience on CASA growth, your cross-selling income is, so far you might have garnered well in this year, but if you're looking at non-government cross-selling income, where do you estimate that percentage to grow?
Yeah. This is another fantastic question. The customer wallet, yes, it was less than even 2%. It was 1.1 per customer. Now it is almost, you're going to touch three products per customer, 3 product or service customer. So it has been increasing, but it will take some more time. Ideally, we want to keep it at least 5. This current financial year, we analyzed private sector banks have customer wallet of 6 products per customer. I think when we increase the customer wallet, our income also, non-interest income also will increase.
Secondly, you have passed an enabling resolution for 5,000 crores worth of raise of funds, which may be over a period of 12 months, maybe between Tier 1 and equity. Hello?
Yes.
Yeah. So now, I understand this may be linked to your government holding to come down to 75%. Is it that so, or it is only for growth capital which you're going to look at?
No, it's a combination of both, because the government holding of 94%, suddenly we may not be able to bring it down within 1 year or 2 year period to 75, may be slightly difficult. So over a period of time, we have to bring this is a combination of equity as well as Tier 1 and Tier 2. So this is an umbrella policy is given that, so that AGM also will be clearing. Then afterwards, depends upon the requirement, we can raise from the market.
Sir, I had suggested in the previous call, I suppose that homework didn't support you in terms of converting government equity into a preference share or some kind of 81 bonds or whatever may be there.
Yes.
If it has not worked out, instead of doing a QIP and destroying our market value, because every time we are placing with local institution or bank treasury, why don't we do a public offer when you have such high amount of CASA and retail customers? If everybody buys 200 shares also, your public issue for 1,000 crores or 1,500 crores will go through.
Yes.
Good suggestion.
So that also we are looking into that.
I am quite clear in my mind that every time we talk about fundraising, our stock depresses, despite your good performance.
Yes.
I am in a camp that either you convert government equity into Tier 1 with a 7-8 year at some reasonable coupon rate linked to GSEC or whatever, or you may do an exercise which benefits the bank shareholders public shareholders rather than only government. What kind of technology spend will we do this year, sir?
Okay.
Yeah, see, related to technology, already we have certain other projects which we have already sanctioned and purchase order has been issued. So if I take Somewhere, if we take the new projects, actually, it may range somewhere in the range of 2 to 300, approximately in the range. But more than, the spend, let me share with you, it is not a day. I think we should also see the scenario with a different angle. Rather than, spending and then taking 2 years to implement, it is better that, go with the fintech collaborations. So as a bank, the bank board has approved, adopted the fintech policy. So going forward, we are better actually looking for a collaboration and the collaboration with the fintechs, engagement with the fintechs, and then try to do the things which may take time in the banking industry, like blockchain or maybe the AI, ML analytics and all those robotics. So this is the way.
What I was talking about, your core banking solutions, upgrade and human resource empowerment with digitization. That's the spend. I'm not talking about co-lending and fintech enrollment along with the banks to expand your footprint.
Good evening. This is Divesh Tinker, GMIT. So we are happy to share with you that recently only in the last financial year, we have upgraded our core banking solution, which is at Banks 24 platform, and we are probably the first bank in entire Banks 24 applications, whichever bank is using, which has migrated to centralized core banking solution of TCS. Going forward, we are also developing, which is of course in line with what our Honorable ED Shri Pandey just now told, that the expenses what he told is towards the infrastructure only. So the first initiative is that we are now moving to private cloud. Some of the applications will take to private cloud in this financial year. For that, the infrastructure is already getting set up. And going forward, we are also part of PSB cloud that has been suggested from IBA to regulator. So we look forward to have some regulations in this financial year. So bank will also explore to get some applications hosted on public cloud as well.
Sir, there were a lot of press briefings or material available that you have initiated co-lending with some for MSME and retail and others. What kind of numbers have you achieved in terms of average ticket and loan size in March 22?
Co-lending, we have made an arrangement with almost 10 entities, NBFCs and all. And in this, initially we are going with a very cautious pace because we want to again streamline it or integrate with our systems and all. But at present, we are having almost 600 crore co-lending with all these NBFCs.
Your meaning outstanding number as of March 22 is 600 crore?
Yeah.
And how much would be housing and how much would be MSME in that?
Housing, there is no co-lending for housing as of date. Only nearly 25 crore is for education loan and rest is for MSMEs.
And gold loan?
Gold loan we don't have co-lending.
We have not done.
Sir, in your agriculture advances, what percentage will be backed by gold?
Pardon, sir?
In your agriculture loans, what percentage of agriculture loans will be backed by gold?
Sir, totally we are having nearly 3,400 crore of gold loan portfolio. Out of that, 1,600 crore is other than gold. Rest is other than agriculture. Rest is agriculture only. And if you see our total agriculture, that is 19,000 crore almost. So if you see that, so it comes to nearly 8 to 9% only.
Sir, any plans on asset monetization, non-core assets for the year?
So as of now, we don't have much assets to monetize. Actually, other than some fixed assets is there. That at present there is nothing is there. So small accounts like investments we have done during last year. Some investments are there in some small companies. That is 12 crore, 15 crore. So all are small accounts. There is no big amounts.
Okay. Secondly, sir, your outlook on.
Mr. Choksi, I'm sorry to interrupt, but there are many participants waiting.
Yeah, I'll come back, ma'am. Thank you.
Thank you so much. Thank you. We'll take our next question from the line of Mahesh NB from Kotak Securities. Please go ahead.
Sorry, sir. So just one follow-up question. Did you use the investment fluctuation reserve in this quarter and the financial year?
Yes. That we have used the investment fluctuation here for this quarter.
And how much would that be, sir?
That we will inform you separately.
Okay, perfect. Thanks.
Thank you. Our next question is from the line of Akash Jain from Ascon Global Services. Please go ahead.
Congratulations, sir, on a good set of numbers. I would like your comments on the sanctions pipeline for the future.
Yes, Mr. Rudra.
Sanctions in the corporate side, almost 8,000 crore sanctions are towards the various projects which we have done, which are under the different stages of disbursement. And in addition to the project finance, some of the sanctions to the extent of 6,000 crore is already there, which are yet to be disbursed. And 5,000 crore are the unutilized limit. So altogether, this comes to almost 15 to 16,000 crore is already available for disbursement for the current year.
Okay. And what has disbursed in this quarter?
This quarter, the entire year I can tell you, the entire year almost 35,000 crore disbursement happened during the year. Out of that, majorly the growth has happened in our infra area and manufacturing and other sector also around 5,000 crore. Infra is having the 8,000 crore and NBFC incremental growth is around 2,000 crore. These are the major area of growth. In addition to that, we have done the LRD also, and some of the petrochemical companies also we have sanctioned. Altogether, these are around 20,000 crore of sanction and disbursement has happened.
Okay. And sir, your guidance for ROA for FY23 would be how much?
ROA, we will thinking of around 0.65 to 0.75 range.
Okay. And credit cost guidance?
Credit growth is 16 to 18%.
Yeah,
credit cost
should be below 2%, maybe range 1.5 to 1.75.
Okay. And sir, what is the total return of book and what is the expected recovery in coming years?
See, total return of books during the year is 3,000 crore, and we expect good recovery, at least 20% recovery in the current year.
Okay. Thank you, sir. That is all from my side.
Yes.
Thank you. Our next question is from the line of Rakesh Kumar from Systematics Group. Please go ahead.
Yeah, hi. Can you hear me, sir?
Yes.
Yes, sir. One question with respect to notes of accounts number 6, the reversal of 717 crore because of, this new tax regime thing. So basically we have debited 717 crore this quarter and actual debit is showing in the P&L is around 458. So there is some, credit also there.
Yeah. 717 crore what you told, it is because of that we have shifted from tax regime, new tax regime, where the tax rate is on lower side. So that we have disclosed. And in some of the cases, as per the tax guidelines, IGAP guidelines, we have created the DTA also. So net impact, it is roughly 400 crore.
Okay. So now, in FY, in both the financial year, FY 21 and 22, we had a very, high tax rate. So hence, for the tax rate would be normalized at a lower level?
Yeah. That in going forward, it would be 25%. So earlier the tax rate was 33%. So because of that, since we are having carry forward losses also, we are not making the payment of tax in normal way. But of course, we were providing the MAT liabilities and there was a cash outgo also. Since we have switched to the new regime, so we are not required to make the provision under MAT, tax provision under MAT.
Okay. And sir, on the slide number 14, the yield on advances number and yield on investment number, both numbers have actually fallen in Q4 on a sequential basis. Then why yield on fund number is going up? So have we done something very spectacular on cash side? Like cash balances yield is so high that it is compensating for on the fall in yield on credit and yield on investment. That is why the yield on funds number is up.
Yield on advances is only 20-25 basis point only has come down. That also, earlier I told you that some 100 crore, 140 crore we have interest reversal we have kept for COVID provisions in future. So otherwise, normalization, it should have been continued at the range of around 7.2 to 7.25.
Then why the yield on fund has gone up, sir? Though the credit yield has come down and investment yield has come down. So why yield on funds have gone up?
And when this gross NPA, I think that the gross NPA level is coming down and maybe because of the denominator effect that interest earning assets.
No, reduction in net NPA would actually push up your credit yield, but that has not happened. So why the
mathematics, we will see that and we will come back to you, sir.
Yield on fund is also includes the other interest income. So some income related to interest on our tax refund also. So and some treasury lending also. So if you take into account all the things that yield on fund has increased.
So how much is the income tax refund, sir, this quarter? Out of 99 crore, 99.4 crore, which is reflecting in others. So how much is the interest income from the income tax refund?
It is roughly 60 crore.
60 crore, okay. Okay, sir, and the depreciation number, why it is going up on a sequential basis? We have, have we changed any accounting policy? What is the reason that depreciation number has gone up so sharply?
Not a change in accounting policy. We have changed the method of computation of depreciation. Earlier we were using the diminishing balance method. Now we come to straight line method. Because of there is increase in depreciation. Second is that this year we have done the revaluation. And after revaluation, there is increase in the depreciation. Cumulative effect is come. That we have debited profit and loss account of this year. Because of that, depreciation amount has increased.
So was there a direction from regulator, or we have done, we have just decided to, change the policy on our own? What is the reason for changing this?
Board has decided for switching over from diminishing method to straight line method for the each point of view, for simplicity that we have done.
In addition to that, with going with that the Ind AS guideline. Yes. We are also over a period of time, if that is implemented, that will also need the straight line method only.
And also the revaluation will make an impact, no? So we have to fall in line with that going forward.
Revaluation, that periodically we have been doing the revaluation every year. That will continue in future.
Okay, and this employee cost number has come down quite meaningfully for this quarter. So what has happened for the bank?
Employee cost is, there was no addition of employees, and last year there was, because of retirement, pension increase was there, family pension increase was there. So this year that type of exceptional items is not there. Last year I think around 250 crore for the exceptional item we have made the provision for last year.
So have we written back anything on the pension because of rates going up? Have we written back any terminal benefits obligation provision?
That is not the case. That pension liability we have been making provision as per the actual valuation. So yes, of course, as compared to last year, there was some benefit because these had hardened.
But there was no write back. No write back we have not done. But because of the rates, maybe this year requirement may be slightly come down.
Yes.
Got it, sir. Got it.
Yes.
Thank you, sir. Thank you so much. Thanks a lot.
Thank you.
Thank you. We'll take a next question from the line of Akhil Hazari from Robo Capital. Please go ahead.
Hi, good evening. Am I audible?
Yes, yes.
So I just wanted to know, first on the credit cost guidance that you've given of 1.5 to 1.75. Last quarter, in the last con call, you had mentioned a similar, guidance. I just want to know, usually it would come down. So is this a conservative approach, or any color that you could share on this?
Yes, it is a conservative approach only. If you see that average, we have seen that quarterly now it is coming around, credit slippage is coming around 500 to 600 crore. So quarterly basis, that means yearly we are expecting around 2,000 crore slippage is happening. So the entire cost, if you see, when the net NPA is coming the level below 1%, and we may have to give the higher provisioning for the entire amount. Almost 100% provisioning we have to give. That means if suppose 2,000 crore addition is coming and maybe recovery is coming that, but the differential amount, 100% provisioning we have to give. That is why little conservatively he has told that. It may come down further over a period of time.
Oh, okay, fine. And any guidance that you can give on the cost to income ratio? No problem. Also, I just want to know any guidance that you can give on the cost to income ratio going forward?
Yes, cost to income ratio, I think now it is a 44 is a comfortable position, but our long range aim is to reach to 40%, but it may take little time, 1 to 2% level over a period of time when the digitization is improving, and other income growth also which will improve the cost to income ratio. But long range plan is 40% and the medium range is 1 to 2% reduction.
Okay, fine, great. Those are my questions. I'm done.
Yes.
Thank you. Our next question is from the line of Ashoka Ajmera from Afcon Global Services. Please go ahead.
Thank you for giving me the opportunity again. I have a couple of small observations and questions. Sir, if in our quality of the asset, the rating wise, if you see, there is a reduction of one account in the AAA rated and it has come down in percentage term from 12% to 10%. So is it paid off, or is it the rating of the company itself is reduced to AA?
No, this is one big account because of the interest rate issue. They have closed down the account because they have requested for reduction of the interest, and last March 31st, and we could not able to reduce the interest rate. So it is not up to the mark, so they have closed the account. That is around 1,400 crores account.
Yeah, so total net difference is 862 crore in that. So that I think that is the major reason. Otherwise, of course, AAA is increased, from 11 to 21%. Sir, my second question was on the treasury. Like we are having now pressure because of the hardening of the interest rate in the treasury income and treasury operation. So would you like to throw some light on that? What is our planning going forward? And one question is that our AFS book for the first time is reduced, from 25,000 crore to 22,000 crore in the March 22, almost about 3,000 crore. So your observation and some comments on that, sir?
Yes, AFS book was earlier 25 was there and it has come down to 23. Over a period of time, what our plan is that to increase our CD ratio. Earlier it was 63-64% was the CD ratio, and this excess SLR securities, we have some around 22,000 crores of SLR securities excess is there, and over a period of time we wanted to increase change from investment book to credit book and to increase the CD ratio to the level of around 74-75%. That is the aim. For short term, every year we could able to increase 3 to 4% of CD ratio, and now it is reached almost 69%. And I think by March 23, we may be able to reach 72-73 level. So the aim is to reduce the investment book.
Sir, there is a minus 135 crore in HFT. So what is that actually? How it can be negative 105 crores in HFT?
Short sell position. So short sell position you have to show into negative.
Yeah. But generally, do we have that kind of short sell? Because
since our view is that the yield will little bit go up, so we have taken the short sell position. And it is a trading position.
Yeah, trading. Yeah, of course, trading only. So anyway, Sir, one small point, sir. There is a penalty of RBI of 2.16 crore. Out of that, 1.12 was in April 25th in 2022, which we have accounted for in 31st March 22 only. So, number one, what is the reason for that small penalty to be again taken back in the last year itself? And second is what kind of, these are the general kind of penalty, or is there any particular incident or something which, or some overlooking of some provisions or some compliances?
Yes, it is correct that it is a provision because since it is a regulator, we are not supposed to give much comments on, but in the walls of this, we can tell that 1.12 crore provision is made, and this is already we have absorbed the current year itself, though it is come now. And the split up of this is one item is that regarding regarding KYC issue, we had 4 or 5 accounts, multiple CAF issue are there. 4 or 5 accounts out of 3 crore accounts. So there are multiple CAF that we could not able to do that. Now I think it may be done. For that they have penalized some 15 lakhs or 20 lakhs. Another split up is that bank had an arrangement with Pune Airport during 2004 and 2004 to 2015. So during that time, there was some fraud is happened during 2012, 2013, and some kind of compliance or something is gone to RBI. And so though the circular of outsourcing policy was issued during 2006 by the RBI, so our contention was that this agreement with the Pune Airport regarding the collection of the customs was 2004 and before issuing the circular of the bank. RBI. So, but however, regulator is regulator, and we could not able to convince properly, or there may be some other, we don't know the reason. So they have penalized 30 lakhs penalty for that. So the third point is that regarding.
Thanks for such elaborate. I didn't want that kind of detailed thing, but thank you very much for being.
Yes.
So one question we'd like to answer. What our MDs are trying to say is that it is more of an interpretation rather than any grave violation, but none of the non-compliances led to any financial loss to the bank. It is all more of a prudent regulatory penalty imposed on the bank. If you look at it internationally, developed countries where financial systems are very strong, their charges penalties will be huge. But as a prudent, one of the best regulators in the world, RBI normally penalty charges, but we took it very seriously. We tried to address all those issues that have been flagged and charged by them. That's what I would like to say. That's why you wanted to elaborate answer this.
No, that was only my aim of asking it, because just to give the little seriousness and sincerity to whole thing. Sir, just two last data this thing. One is that how much is carry forward losses available to us in income tax, as per income tax act, for future? Hello?
At present, I am not having information, but I will inform you.
And sir, on the co-lending space, you said your book is about 600 crores. What is our basically target and what is our objective and mission about, co-lending? Are we going, we want to go too aggressive on co-lending? Is it the right vehicle for us? And what is our target for 22-23? What is 2,000, 5,000 crore? How much, is there any such planning has gone into it?
Yeah, see, actually the co-lending is one of the very good model, and it is important for the lenders for reaching out to the customer at larger level. Now, but at the same time, if we see the regulatory guidelines, there has to be a robust system in the background if you want to go co-lending at a very, with the speed and for a broader exposure. So what we have done, the bank has already built up the technological platforms for the co-lending, which is actually end-to-end. And further, we are also building, the straight-through processes on the with the rule engine and on the credit sanctions. So what we think that yes, it is our focus area, co-lending, absolutely. The second one is we want to have a co-lending. Already we have the arrangement in place. So we'll be going forward with the strong players in the market. The third is with the strong and robust, the technological intervention, which already we have that platform, because 80-20 collection monitoring and the fees of the in between, the agency for the collection and other things. So now we have in place. So if you take call, so co-lending is yes our focus area for point number one. Point number one, second, we want to go with the robust side is we foresee for a medium term say still we have 600 crores, so we want to increase it to 1,000, 1,500. And then in the medium after post that, certainly all the banks we are having a learning curve out of the exposure we have. But up till now, learning curve is very good. So we foresee around 2,000 in the mid to long term range.
Ajmera ji, regarding your carry forward losses queries, we are carry forward loss in income tax books is 11,000 crores.
How much, sir?
11,000 crores.
Oh, that's great. So that will take care of how much? Almost 2 years.
Yeah, 2 or 3 years that we are not required to pay the tax liabilities. Under MAT, we are not required to pay because MAT is not.
No MAT now, since you have got in the new regime, now you have gone into, so no MAT. And with the kind of profitability, net profit you see in the coming years, I think 2,000, 2,500 crore minimum every year. I think you are covered for a few years actually. Thank you. Thank you very much.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the conference back to Mr. Shri A.S. Rajiv for closing comments. Over to you, sir.
So once again, thank you so much, all the participants, and my request is we will continue this dialogue in coming quarters also. Thank you so much.
Thank you, members of the management. Ladies and gentlemen, on behalf of Bank of Maharashtra, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.